Hey there, and welcome back. Today, we're diving into one single number that has policymakers, investors, and honestly, all of us hanging on every single update. It's a figure that can move global markets and, yeah, even change the price of your morning coffee. So what is it?
And that's a really good question, right? How can just one piece of data from one country cause these huge waves, affecting everything from our grocery bills to stock markets all around the world?
Well, the answer is U.S. inflation. This single concept is really the key to understanding so many of the economic pressures we're all feeling right now. So let's break down exactly what it is, and more importantly, why it matters so much to you. All right, first things first. Let's start with the absolute basics. To really get what the headlines are all about, we need to build a solid foundation of what U.S. inflation actually is.
You know, in the simplest terms, inflation is why that dollar bill in your pocket doesn't stretch as far as it did last year. It's the rate at which the cost of living is going up, and that directly hits the power of your wallet.
So, how do we even track this? Well, the main tool is something called the Consumer Price Index, or CPI. I want you to imagine a giant virtual shopping cart filled with all the stuff households buy regularly. We're talking groceries, gas for the car, rent or mortgage payments, you name it. By tracking the price of this whole basket month after month, economists get a measure of how quickly costs are rising for the average person. Now, just a quick note, the Fed also keeps a close eye on another number called PCE. It's just a slightly different basket of stuff, but CPI is the one you hear about most. And all of this revolves around one magic number, 2%. The Federal Reserve, that's the U.S. central bank, sees 2% annual inflation as the sweet spot. It means the economy is growing healthily, but it's not so hot that it's burning away the value of your savings. This 2% target is the benchmark for pretty much everything the Fed does. Okay, so we've got that 2% goal in our heads. Let's dive into the main event, the latest inflation report. What is the data telling us right this very minute?
You know, I think this quote from economists just hits the nail on the head. There's this feeling of, well, cautious optimism. The numbers are showing we're moving in the right direction, but we are definitely not out of the woods yet. The data is, well, it's complicated.
And this right here really shows you what they mean. On one hand, you've got the good news. The overall, big picture inflation rate is cooling off, and it's getting much closer to that 2% target. But then you look at the other side. Key things like housing and insurance are still stubbornly high, and that puts a real squeeze on people's budgets. And these are what we call sticky prices. I mean, think about it. Things like housing supply shortages don't just disappear overnight, so those costs are slow to come down. It really is a mixed picture.
So you can see how this mixed bag of data puts the Federal Reserve in a really tough spot. Let's dig into how they actually respond, and the main tool they use to steer this giant economic ship.
So what's their main weapon in this fight? It all comes down to one thing: interest rates. The best way to think about it is like a lever for the entire economy. By pushing rates up or down, the Fed can either tap the brakes to cool things down or hit the gas to speed things up.
Let's walk through how this actually works step by step. So, step 1. Inflation is running too hot. The Fed sees this and steps in, raising interest rates. Right away, it becomes more expensive for everyone to borrow money, whether you're trying to get a mortgage or a business is trying to expand. And what happens then? Well, we all tend to spend a little less, which cools down demand and hopefully brings prices back under control. Okay, so the Fed pulls this lever. What happens next? Well, their decisions don't just happen in a vacuum. They create this powerful ripple effect that touches every single part of our financial lives, from what's in our wallets to what's happening on Wall Street. For you and me, the most obvious hit is right in the wallet. When inflation is high, your paycheck just doesn't go as far. It's as simple as that. Getting inflation under control is absolutely key to making everyday life feel more affordable.
And it's not just us at the checkout line. Wall Street is absolutely glued to these numbers. When inflation looks like it's cooling down, investors get excited because it might mean the Fed will cut interest rates, which is usually great news for stocks. But if inflation comes in hotter than expected, oh boy, that can send markets into a tailspin.
This chart is a great way to see just how far those ripples spread. Just look at the direct hits to your personal finances. Mortgage rates, car loans, credit card rates, they all tend to dance to the Fed's tune. Even the interest you earn on your savings or how your 401k performs is tied up in this big fight against inflation. All right, so that's where we are. The big question is, what's next? For this last part, let's look at the crystal ball and explore what might be coming down the road for the economy.
And this is super important to remember. The Fed doesn't control everything. They're not operating in a bubble. A conflict halfway around the world could suddenly make gas prices spike. A snag in the global supply chain could make everything from cars to couches more expensive. These are wild cards that make the Fed's job incredibly challenging.
When you really boil it all down, it comes to two possible paths forward, which you see right here. Scenario 1. The good news keeps coming. Inflation keeps drifting down towards that 2% target. If that happens, the Fed will probably feel good about starting to cut interest rates. But Scenario 2. If those sticky prices start heating up again, they'll have no choice but to keep rates high, or maybe even go higher to finish the job.
So let's just wrap this up. We have come a very long way, and the worst of the inflation surge really does seem to be behind us. But as all the data shows, this is still a very delicate balancing act, and we're not at the mission accomplished banner just yet.
And that really is the million-dollar question, isn't it? With so many moving pieces, both at home and around the world, the path forward is anything but certain. The next few inflation reports are going to be absolutely critical. Thanks for diving in with us.